We are now up to posting our cash payments journal to our ledgers. So I've copied our cash payments journal over here. Just in case you're wondering why the sundry column's so thick, it's because it matches up with the particulars column down here on the spreadsheet, so I can't have them different thicknesses, just for sake of simplicity. So we have already got our chart of account numbers in there from previous video. We have got our opening balances in there, and we've got our cash receipts journal already posted there. So now it's our cash payments journal. Just like before, we need to think about our bank ledger account, and in this case it's a cash payment. So what is happening? We look at our debit credit rules. Remember, bank is an asset. If we're paying out cash, then bank account's going down, so it is asset going down. So therefore bank must be being credited. So under here, I'm going to write credit. Just like before, it's the opposite for everything else. So if bank is being credited, these must all be being debited. All the others are debited, and so these individual ones up here must also be debited. If we take an example of those, say for example wages. Now wages is an expense. If we look over here, the expense is getting bigger as we pay more wages. Our expense gets bigger, so an increase in expense is a debit. If we go back here, you can see that we have debited wages. So just to show you that that rule works, we work out what happens to the bank. Everything else is the opposite with it. Bank going down is a credit. Okay, we're going to start posting those. I'm not going to put the 7th of March in because it's already there. Before we had cash receipts, so this time it's the cash payments journal. It's in the credit column, so it's going over here, 4333, and I'll just quickly work that out. So 10163. So 10163 debit. I'm now crediting. So before I added the debits because we had a debit and we added another debit, credit means we're going the opposite direction. So it's minusing off that. So 10163, if it's a debit, the credit is going to reduce it. And the vice versa works too. If it was a credit balance and then we debited it, that would reduce it as well. So 10163 minus 4333, and that's going to give me 58. It's still a debit balance because my 10,163 debits is more than my 4,333 credits. So the debit wins out overall. So it's still going to be a debit balance. Okay, I'm now going to do GST. Once again, I'm not going to put the date because it's already there, the 7th of March, being its own column. I use that date. It's 390 and it's 390 in the debit. So I'm putting 390 there. Now, in this case here, I had 1,543 credits. So therefore the debit means we now go back down the opposite way. So we minus them off. So 1543 minus the 390 is going to give me 153. Now it's still going to be a credit balance because I have more credits than I have debits. So the credits still win out overall. So it's still a credit balance there. Okay, I've done those two. So we might just, oops, there we go. It's a bit more cooperative. I'm just going to tick those off. Okay, the next one, purchases, is $1,000 debit. Once again, it's got its own column. So I'm going to use the end date, so the 7th of March. Wrong. And I've spelled it wrong again. There we go. I'm going to write in bank, $1,000. Already debiting more, so I've now got more debits of 5,000. And tick it off. Okay, wages is 750 debit, so I'm going to go down to my wages. See, its own column, so I'm using the last date again. And altogether I'm going to have 14,000 because I've already had 14,000 debits and I've debited even more. Up to the next one, I'll just tick this off. The next one is drawings for 23 debit. So down to my drawings, 23, last date, because it has its own column. Bank in particulars, because they all have bank in particulars except for the bank column, bank ledger account. This is going to be 2023 debit. Okay, tick it off. Now we're going to do the individual ones in the sundry. Now remember, a sundry account, ledger account, for those ones, we use the individual day of the transaction. So for advertising, we're going to use 3rd of March. So it's $100 debit in advertising on the 3rd of March. So 3 March to my 100. Going to call it bank once again because they all are. So altogether it's going to be 600 debit in the advertising. And we'll tick that one off. Okay, we've got $1,500 on the 7th of March for shop fittings. So $1,500 in that. 7th of March, the date the transaction happens in. It just is purely coincidental that it's also the last day. And it's going to be $21,500 debit altogether there. So that one done. The next one is the loan, $500 debit. And that also happened on the last day. Bank, and it's 500 debit. So here we had 7,000 credit. We've now debited it, so that means we minus that off. So we're going to have 6,500. There's 7,000 credits and 500 debits. So overall, the credit still wins with 6,500 of those. And the last one we've got is interest. So interest expense of $70 debit. So we're going down to interest expense, $70 in the debit, 7th of March, it happened on the last day, bank, and that gives a 20 debit. Yeah. And we'll go and tick that off. Ticking it off is a really good idea to make sure you haven't missed anything off, because it's really easy to miss something out. You don't sort of do that double check. Okay, we've now finished all our posting to the ledger accounts, and our next step is going to be doing the trial balance using these, showing you how it flows through.